Reggie. Here we are in the middle of tax season, and the IRS has released an annual report, something they put out every March. I'm wondering if you actually know what that report is.
I think I might have an idea, but I feel like when the IRS releases something, I don't really know if I want to know.
Yeah, I mean, they could be changing a form or a calculation method, which is absolutely something they've done this tax season. But no, this particular thing is the Dirty Dozen, the 12 tax scams that the IRS wants all taxpayers to be on the lookout for, to keep your account clean with the IRS, to keep your tax return positions legal. They feel it's important that you understand and know about these 12 dirty tax scams.
Yeah, there always seems to be something new each year. The IRS is always on top of it. And yeah, I'm pretty familiar with the Dirty Dozen, having gone through it, and the little changes that they bring up every single year.
Yeah, and in fact, there is a new arrival on the Dirty Dozen list this year, which I think is the first time in a couple of years that there has been an outright new thing on that Dirty Dozen list, and not just sort of a reformulation of an existing thing. So yeah, it'll be fun to dive into what these 12 tricks and scams are.
Well, let's get into the Dirty Dozen on this episode of Money and Taxes from BB to XYZ, the show where we break down a single money topic and explain how it could affect those across the generations, from baby boomers to X, Y, and Z. I'm Regina Neenan, certified financial planner and accredited behavioral finance professional.
And I'm Jason Speciner, certified financial planner and enrolled agent. And yeah, let's just dive right into it with Dirty Dozen. Scam number one is IRS impersonation by email and text, or we may have also been familiar with in the past as phishing and smishing by nefarious actors.
I still don't love the word smishing. I still find it pretty strange. But basically, this is where somebody sends you a link in an email or in a text. You click it, they get a hold of some information of yours that they can use to file a fake return.
Yeah, and that, or do something else with your identity, obviously, with a lot of information that comes out of your tax data. There's just a lot that can go on there. So the key part of this is that the IRS is not going to send you an email or text message out of the blue and ask you to do something for them. That is not going to happen. So be careful, as you would with any other entity's correspondence, to make sure that it is a legitimate piece of correspondence. Dirty Dozen number 2 is a new one this year, and that is AI-enabled IRS impersonation by phone. So keep in mind, we are talking about AI calling you, essentially, possibly sounding just like a human being and talking to you about your tax account.
You were really excited to touch on this one, Jason, and I know that you have a certain way that you answer the phone now so that nobody can try to steal your voice.
Yeah, and this is, I mean, of course, my voice is on how many dozens of podcast episodes at this point, but
true.
I have actually gotten away from answering the phone with my first name, just simply because it's just at this point like confirming that I am Jason, and they get a snippet of my voice or they get a confirmation of something. Like, even that has become something that's concerning. So just say hello, and they ask if it's Jason, of course, ask who it is, and all the fun things. Anyway, we digress, because with AI-enabled IRS impersonation, what you just absolutely have to be, careful for here is, what is the nature of the call? What is the context of it? Again, out of the blue, very rarely will the IRS call you. They will write you a letter in the U.S. mail. That is primarily how you are going to hear from them. So anytime you have any sort of call, any sort of thing that is allegedly from the IRS, always have your alerts up and make sure that it is legitimate.
Yeah, I think it's important to remember that the IRS are notorious for their snail mail. Always through, as you mentioned, the USPS, getting those letters. I freaked out a little bit when I got one last year, but it ended up not being a big deal at all. So yeah, if the IRS is contacting you in general, it's probably going to be through the old-fashioned mail in your mailbox.
And if it's not, if you do get electronic correspondence from the IRS or something from them, it is generally going to be in your tax account. You have to log into the IRS's website with your credential, with your government ID credential that they have us use now. So yeah, it's going to be behind something that is not just going to be in a regular email or just going to be some random agent calling you.
That's an easy way to get around everything that we've mentioned so far, the phishing and text, and then also the AI impersonation by voice.
Is logging into your taxpayer account?
Or just knowing that they're probably not going to be sending you a random link or
Yes.
sending a message straight to voicemail saying that they're from the
Right.
IRS.
Right. No, absolutely. So be on the lookout for that. Now, Dirty Dozen number 3 is fake charities. And fake charities have been on the list for a while. The biggest, sort of most interesting one that has come up in the recent past is this concept of conservation easements, right? Which aren't necessarily a fake charity, but are a way to abuse, if you will, or at least in the IRS's opinion, abuse the charitable intent of placing a conservation easement on a piece of land, right? On the other side of that, you have potentially organizations that are setting up as supposedly a charitable organization, but essentially just pocketing that money for their organizers, right? So a couple of angles to this fake charity.
Definitely something to be on the lookout for, because if you donate to a charity that you think is legit, you think your dollars are going toward this noble cause that you believe in, only to find out that somebody took your cash and pocketed it, and you don't get to deduct it on your taxes. So head to the IRS website. There is a charity search that you can do to make sure that the charity you're considering giving to is legit.
Yeah, absolutely. Look up the charity. Make sure that they are a qualified public charity before you make a donation. Number 4, misleading tax advice on social media. Oh my gosh.
Ooh.
Yeah, there is so much. It is like it's funny to scroll through sometimes and see things, and I'm just sitting there thinking, well, that's about 37% accurate, or that's about right, because a lot of these will take these relatively complex concepts and try to distill them down into a quick little flashy video with these different things and the scratchy throat voice and talking about all this stuff. And ultimately, right, it's not going to get an effective tax strategy in place. And oftentimes is going to lead you down some rabbit holes that could potentially cost you money.
Yeah, a lot of times this stuff sounds way too good to be true, and most of the time it is. So
Yeah.
if you are scrolling through social media and you see this hot new tax tip that's being promoted, definitely get your radar up. Know that if it sounds too good to be true, it probably is. Also got to throw in here that sometimes it's fun to fact check some of the financial planning advice that these same content creators promote on social media. So if you have a fun one, send it our way. Maybe we'll talk about it on a future episode.
Yeah, the financial planning Dirty Dozen. There we go. I like this. I like where that's headed. So remember when we talked about IRS account access, IRS Online? That is their number 5. Dirty Dozen is being careful that, again, coming back to the smishing and the phishing and all the stuff, and divulging your credentials, your access to your IRS Online account is something that, if it happens, it's a potential ID theft risk, right? Because now they are in your taxpayer account. So it's one of those that you really have to work hard to make sure you're keeping secure. And of course, with the login system, right, that ID Me system, it is a little bit on a higher level as far as verifying that it's indeed you logging in.
Yeah, and if you haven't maybe done quite as much due diligence when finding a tax preparer, if someone's asking you for your login and password to prepare your taxes, definitely not something that they should be asking for, and something that you should not be giving away.
Mm-hmm. Yeah, absolutely. Just make sure you're on irs.gov if you're using that credential, basically.
Yep.
Now, item number 6 is an interesting one just because it may not apply to everyone, but it is something that has gotten on their radar and is, again, a new item, right, for the Dirty Dozen. And that is the abusive, undistributed long-term capital gain claims. But this is all related to Form 2439, which is basically a document that reports certain items of income to owners typically of like real estate or REITs, and kind of explains sort of how the capital gains are treated or handled within it, and if there is a credit that is due for that. So it's sort of a nuanced one, but just simply stated, if there's any time that anyone has brought up something where it like you've never seen this on your tax return, but all of a sudden you are filing this extra form and claiming some credit you've never heard of or never seen and have zero idea why, at least ask questions about that. Make sure that you understand what's going into your tax return.
Yeah, this is one that I haven't heard of before, but a good reminder, as you mentioned, if somebody else is preparing your taxes for you, your signature is actually the one that matters, you as the taxpayer. So make sure you're going through that return that was prepared for you. Make sure that it looks legit, nothing looks out of place before you sign off and have that submitted to the IRS.
Yeah. Fun one here, number 7, is sort of in the same sort of vein as all of this, right? And that is bogus self-employment tax credit promotion, right? So the first thing to be very, very mindful of here is there is no such thing as the self-employment tax credit. What is this, right? What this is getting you to believe that if you declare yourself self-employed, you can create, right, some sort of tax benefit for that. And the way they're accomplishing that is by filing a Schedule C with false data that takes a big old loss on your tax return and creates all this extra refund for you, and could really put you into some hot water.
I love that this one mentions that you should be trusting qualified tax professionals, not social media promoters.
Yes, right. That is exactly it. Like there is a right way and a wrong way to do things, and if a credit doesn't exist, yeah, let's probably not try to claim it or try to get some sort of tax benefit from the existence of a self-employment activity that may not exist at all.
Yeah, we don't want an audit if we can avoid it.
Ghost preparers is an interesting one. It is probably more of an administrative thing for the IRS. And of course, what those folks are doing is ultimately not claiming responsibility for the content of a tax return. But that is preparing a return for compensation for a taxpayer, but not declaring that they were the paid preparer on the return, because then, of course, there's no paid preparer to come back to and say, hey, you've done this incorrectly, and there are no penalties, right, for those actions.
So this is basically someone creating your tax filing for you, but not putting their name on it, not putting their preparer identification number on it. So it looks like you, the taxpayer, have done everything and you haven't received any assistance, when really
Right.
there was somebody else who was helping you out along the way.
Yep. You are the one who filed Form 2439, right? You are the one who claimed
No.
this self-employment tax credit. It is not the preparer, because there is no preparer on this tax return, Reggie. Right. Exactly. So again, if somebody prepares your tax return for compensation, make sure they sign that return. Their name appears at the bottom of it with their P10, so that you know that they stand behind their positions on the return. Number 9 probably gets more into that conservation easement section as well, and that is non-cash charitable contribution schemes, which actually specifically calls out the inflated appraisals of donated property, using these syndicated conservation easements or art to take a larger than reasonable tax deduction, based on some kind of fuzzy logic with the whole tax law as it applies here.
So let me get this one right. This is someone donating land or donating a work of art or something similar,
Mhm.
and just claiming
Mhm.
way more of a deduction on their return than they are eligible for based on the actual thing that they donated.
Sort of. I'll take it one step further. So basically, just imagine you bought a piece of land for virtually nothing. And
Hmm.
then you had an assessment done to determine what is the highest and best use of this land. And if it were used in that way, what would it be worth? Right. So this
Hmm.
could be a piece of, swampland in, the worst part of the swamp area in like Florida, whatever. And, but if you drilled oil here, it'd be worth 10x whatever it is. That then is the value that is used on the conservation use. Same thing with the art. Buy a relatively inexpensive piece of art. Oh, this is appraised at 50x what I bought it for. I'm going to donate it to a museum or whatever the case, and take a much larger deduction. So yeah, absolutely. It is flubbing the numbers, if you will, to get a larger deduction.
That is dirty. I don't like it.
Other interesting one here is overstated withholding scheme. So this is simply saying that on your tax return, right? I've always mentioned that you can put anything you want on a tax return, right? You legitimately can, right? You're supposed to follow the instructions of what you do and where you put where. But if you want to write in on some line that you had $1 million of withholding for some other withholding, you can do that, and you can have a refund generated. You can claim the refund, and the IRS will process the tax return. Okay. So like all those things will happen. And on top of that, you might actually get that money paid out, right? I mean, it is that like possible. But at the same time, it is often something that is caught immediately and can get you into a lot of hot water, making a false refund claim, and especially one that is significantly larger, right, than what it should have been. So this is, again, putting just a random withholding number on your tax return to claim as a credit to hype up your refund that you're getting, so you feel a lot better about, oh, this preparer has done some magic for me, when really they just lied to the IRS for you.
Yeah. Again, we don't want the IRS coming after us. Find a reputable tax preparer if you are choosing to work with someone.
Now, number 11, they're coming after us, right, or after me as the tax professional, and that is spear phishing and malware campaigns targeting tax professionals, right? So that is trying to get into our systems, right? Because they know that we have taxpayer data because we prepare tax returns. And so this is something that we are incredibly careful with. We have a very detailed data security policy. And so this is always on our radar, right? Always something that we are on high alert for, but absolutely something that, right, we've seen attempts for. We've definitely seen something come in that is clearly a phishing attempt or the like, and some that are not as clear, but we are able to catch with our programs and with our processes.
Yeah, so it's not just you, dear listeners, who have to be on alert for these tax scams and schemes. Jason and the rest of our team are looking out for you as well.
And the last one actually is another new one on the list, at least from 2025. And this is the aggressive or misleading offer and compromise marketing mills. So a few years ago, for at least, well, I don't know, since COVID, all the rage in sort of these pop-up cottage industry firms has been the employee retention credit, which is now sort of a bygone thing. So now these firms are turning to these offer and compromises, which an offer and compromise, if you're not aware, is basically something you do when you have a large balance with the IRS, but you literally have no way to pay it. You are insolvent. You are very, very much not going to be able to repay that debt. They will work with you in that case. I mean, it's going to still stink. You're not going to end up with a big smiley face, but you are going to end up not having to pay some debt that you may never be able to pay. What these mills promise is that, for your average tax scenario, for your average thing where you don't qualify for offer and compromise because you have the means and the resources, you just don't want to pay a big tax bill, whatever the case is, they promise that they'll get you out of it. And they'll charge you up front, they'll charge you fees, and they'll just sort of pile it all on and maybe not get you the resolution that you think you're getting.
So they're charging you and you end up not getting out of what you were going to have to pay in the first place.
Yeah, more money, right? It's just like, it's as as someone I once knew politely referred to it as, and maybe not so politely, the schmuck tax is being paid on this.
No.
You fall a victim to. Do not fall a victim to the offer and compromise mills.
Well, with that, let's get into today's takeaways. And takeaway number 1 is just to be on the lookout for people trying to steal your information or act in nefarious ways to influence your tax return or maybe get your tax refund if you have one coming due. Never lie on your tax return, and always put the information in there as it comes to you. Don't make any flubs.
Yeah, absolutely. And takeaway number 2 sort of applies beyond just simply the tax universe, but that is, of course, just some basic reminders about ID protection, right? And all of the bad actors out there looking for ways to compromise your identity so that they can use it for their financial benefit at your financial detriment. Just be careful with your data.
And takeaway number 3, an easy way to get around a lot of these issues is to work with a qualified professional. Jason, you always mention at the beginning of our episodes that you are an enrolled agent. Another good little bit of alphabet soup for you to look for is a CPA.
Certified Public Accountant, Enrolled Agent. Those are your two main tax preparation professionals who you should be looking for and consulting with as you prepare your income tax return.
Now, do you have another idea for us, another beyond the dirty dozen, a baker's dozen?
Baker's dozen.
If you have an idea for us to avoid, maybe something that you've run into or something else that you've heard about in the nefarious world here, reach out to us at podcast@fpfoco.com or reach out to us on social media. You can find us on your favorite channels at FPFoCo.
Well, hey, thanks for checking out the Dirty Dozen with us. It was a fun time chatting about it, and we'll talk to you soon.
Jason Speciner and Regina Neenan are investment advisor representatives of FPFoCo, a registered investment advisor. The information in this podcast is provided for general educational and entertainment purposes only. It may not apply to you or your specific circumstances and should not be considered financial, investment, or tax advice.